Thinking about buying a home, but feeling overwhelmed by all of the paperwork? Don't worry, I've got you covered. In this video, I'll be breaking down exactly what documents you'll need in order to apply for a home loan, whether it's your first time buying a home or if you just need a little bit of a refresher. Stick around, this video can save you some time, stress, and maybe even some money. Hi there, welcome back to the channel where we make the journey to home ownership easy and stress-free. If you're new here, I'm Sabria Callis, your partner in finding and funding your new home. And today we're answering a question I get all the time. What type of paperwork do I need for a home loan? So grab a notebook and let's get into it. Before we talk specifics, let's answer the bigger question. Why is this paperwork so important? When you apply for a home loan, lenders need to verify that you're financially stable enough to make your monthly payments. Think of it like giving your lender a full picture of your financial life. They'll evaluate your income, debts, assets, and credit to ensure that you're the right fit for a mortgage and to determine how much house you can afford. Okay, now let's break it down. Here's the paperwork that you'll need typically when applying for a home loan. And I've organized it into five key categories. One, proof of identity. Two, proof of income. Three, credit documentation. Four, asset information. And five, debt verification. First and foremost, proof of identity is about security. It helps lenders ensure that you are who you say you are. This protects both you and the lender from fraud, identity theft, or any other financial crimes. I want you to think about it. You're asking the lender to provide you with thousands, maybe even hundreds of thousands of dollars for your home purchase. They need to confirm that they're lending to the correct person and not an imposter that's using your name or your details. Lenders typically request documents like your driver's license, passport, or another government issued ID. And these documents include essential information like your name, photo, and the date of birth, all of which help verify your identity. So, beyond fraud prevention, lenders also need to prove your identity to comply with federal laws like the USA Patriot Act. These laws require financial institutions to verify identities to prevent illegal activities like money laundering or funding terrorism. Now, I know sharing personal information can feel a little nerve-wracking, but rest assured, mortgage lenders are required to keep your data safe and secure, and your information is used solely to ensure that the loan process goes through smoothly. So next time your lenders ask for proof of identity, know that it's not just a formality, it's an important step in protecting you, your finances, and the integrity of the loan process. Listen, while you're here, don't forget to like and comment below. If you have any additional questions on the identification process, drop it in the comments below. Next is proof of income, which shows your ability to make your monthly mortgage payments. Proof of income is one of the most important pieces of the mortgage application puzzle. Why? Because lenders need to make sure that you can afford your loan. So providing your income details allows them to evaluate your ability to repay the mortgage over time. And lenders are typically looking at your income to calculate something called your debt to income ratio, or DTI. This is a percentage that shows how much of your income is used to pay off debts. A lower DTI signals that you're financially stable and less likely to miss mortgage payments. Now, proof of income can come from many different sources. If you're employed, lenders may request recent pay stubs, W-2s, or even employment verification letters. For self-employed individuals or freelancers, you might need to provide tax returns, 1099 forms, or business financial statements. Here's why this matters. Lenders want to make sure that you're set up for success. Verifying your income is going to help them determine the right loan amount for you so you don't end up overburdened by payments that are too high. In addition to income, lenders may also consider your savings or other assets as part of the picture. And these details are going to show them that you're financially prepared. Even if your income varies or unexpected expenses arise, remember, providing that proof of income isn't just about meeting lender requirements. It's about helping you make a smart financial decision by ensuring that you can comfortably afford your mortgage. You're setting yourself up for a long-term home ownership success. I did a recent video on the burden of being house poor. Make sure you follow it down below. I think I'll link it over here to the side. One of these sides I have it, and it'll be able to kind of go into why you don't want to be house poor. So when your lender asks for proof of income, don't stress. It's all part of the process to match you with the best loan for your situation. If you have any questions about the documents that you might need to gather, how to prepare, leave me a comment. Third on the list is credit documentation. Your credit documentation is essentially a snapshot of your financial health. It helps the lenders assess one big question: how likely are you to repay the loan? This information is going to play a key role in determining whether you're approved and what terms you're offered. One of the first things lenders look at is your credit score. This is the three-digit number that gives them an idea of how you've managed credit in the past. A higher score can help you qualify for better interest rates, while a lower credit score might mean higher rates or additional requirements. Lenders also dive into your full credit report, which includes details like your payment history, have your bills been paid on time, and your current debt levels. These factors help them understand how much risk they're taking by lending to you. So here's the thing, that your credit documentation isn't just about qualifying the loan. It's also about helping you. By analyzing the credit, lenders are going to be able to determine a loan amount and a payment plan that fits your financial situation, so you don't take on more than you can handle. Typically, lenders will request authorization to pull your credit report. You may also need to provide documents for any recent credit inquiries or explain unusual activity like large debt payoffs or disputes. If your credit isn't perfect, don't worry. Many lenders do work with borrowers to find solutions. They also have programs available like FHA or VA loans that cater to buyers with lower credit scores. And improving your credit over time can make refinancing or future loans a tad bit easier. So when your lender asks for credit documentation, remember, it's not just the paperwork, it's a tool to help you secure your dream home in a way that's financially suitable. Now, let's talk about assets. Simply put it, your assets show lenders that you have the financial resources to cover the upfront costs of buying a home and to handle any unexpected expenses after the purchase. These upfront costs include your down payment, closing costs, and reserves. So, what counts as an asset? It could be money that's in your checking or your savings account, investments like stocks and bonds, retirement accounts, or even the cash value of life insurance policies. Basically, anything of value that can be easily turned into cash to cover home buying expenses. Lenders want to make sure that you have enough assets to cover three main things: your down payment, closing costs, and reserves. Reserves are those extra funds left over after you've paid any upfront costs, showing the lender that you can handle a few months of mortgage payments, even if something unexpected happens. Now, here's why this matters. By verifying your assets, lenders can gauge how financially stable you are. So, a strong asset profile reduces their risk, which can help qualify you for better loan terms like lower interest rates or even reduced fees. So, what will lenders ask for? They're typically going to need some proof of recent bank statements, your investment account summaries, or proof of funds. And if you're receiving a financial gift of your for your down payment, you may also need a gift letter to verify its source. Don't worry if your asset profile isn't perfect. Many lenders do offer programs for first-time buyers or those with limited savings. And if you're working with a professional, they can help guide you on how to strengthen your asset profile if needed. So when your lender asks for asset information, remember it's not just about ticking those boxes, it's about ensuring you're financially prepared for this exciting journey of home ownership. And if you're finding this video helpful so far, be sure to like it. Drop me any questions that you might have in the comments. I'm here to help. Now, let's talk about the last but not least, debt verification. Debt verification is the process that lenders use to understand what financial obligations you already have. This is going to include credit cards, car loans, student loans, personal loans, or any other recurring payments. Lenders are going to use the debt information to calculate the debt to income ratio, or the DTI, and this is the percentage of your monthly income that goes toward paying debts. A lower DTI means that you have more financial flexibility, which makes you a safer bet for lenders. Most lenders, they prefer your DTI to be below 43% through some of the programs, may allow a few higher ratios, but a manageable DTI shows that you're not overburdened by existing debt and that you can handle a new mortgage payment comfortably. Debt verification isn't just about protecting the lender, it's also about protecting you. And by evaluating your current debts, lenders can ensure that you're not taking on more than that you can handle. It's helping you avoid any financial stress down the road. Trust me, been there, done that, don't want to wear the hat anymore. And there you have it, folks. 5 key categories that you need to have in place when you're ready to submit all that paperwork when applying for a home loan, or either whether you're refinancing for a home, you still need to have the same documentation in place. While you're here, do me a favor, like, subscribe, and share this out with someone that may be on the journey or considering the journey of home ownership. If you have any additional questions, I do offer a free consultation to answer those questions and get you on a path to home ownership. I'm going to drop that link down below where you can set up an appointment for us to talk about your specific situation. I look forward to seeing you on the next video. Bye now.